Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look at the euro currency again. So as you can see, really dramatic action was yesterday on the market. If you remember, in the weekly report we said that, well, theoretically bulls have chances to keep situation under control if somehow by some miracle maybe market could show the rally up from the 112 area. And this miracle actually has happened. So yesterday was the Fed statement, and Jay Powell has given the hint that the economy pace doesn't match to expectation, and the door keeps open for rate cut this year. So now the questions will be 25 points or 50 points rate cut, but that was the clear signal to the market. So currently, guys, it means very important things. So first of all, the reassessment of the overall situation, despite the good statistics, probably will not happen. So the major concern that we discussed in the weekly report was around the performance of the United States economy. So by the statistics, the overall performance is not bad. And my personal opinion is that it's not really situation as bad as it was shown in the media, in the internet, so in the treatment by the investors. So I thought actually that investors a bit blackened the overall picture. That's not really as bad as it was treated. But that was the major factor that pushed euro currency higher at this rally. Here, this was some reassessment idea of the possible. Maybe it's not as bad, and as you can see, it shows downward reaction. But actually, guys, that probably was mostly on reaction on the Draghi speech on the situation in the European economy as well. And that was already the statement from the Fed. That's indeed they see some slowdown in the economy, and maybe it will be needed to cut the rate. But the problem here, guys, is that I have some doubts on the durability of this action. Why? Because actually that information already stands here in the price action that we see in this moment. That is mostly stands due to the statement of the Draghi on the weak economy. But this rally, what it is? So actually this information already is priced in mostly. Yes, it has got official confirmation, but market probably was ready for that. Besides, from the Fed statement, the overall situation in Europe and with the euro currency has not become the better. So and now is the question: what was that? Was it just something really new, or is it just a reaction on the confirmation, official confirmation of the market suggestion on the perspective of the United States economy and perspective of the rate cut? And if this is just reaction, short-term reaction, what will happen next? Because we need to check this out. So whether this will be really some starting of the upward action here, or it will be just retracement of this leg, market can continue to move down. Because both central banks talks about a negative situation with the dovish policy, but European Central Bank statement was a bit more dovish, I suppose. But anyway, currently, guys, I think that the major question that stands on the table for us is how reliable this action is. So what the durability of this action will show. So speaking on the daily chart, here we have bullish trend, and here we are turning back to the idea of this pattern. Just take a look. Here we have left shoulder head. This could become the right shoulder. From that standpoint, we will keep an eye on this A, B, C bottom pattern. And its nearest target stands right at the neckline, the COP 1323 approximately. The OP will stand above the confluence, so around 1312. At the same time, since market stands here inside of the AB leg, theoretically, it keeps chances on the butterfly here. This market could drop below the lows. We also keep this scenario on the table because we do not know how strong and reliable this action will be, whether it will be short-term reaction or it will be really upward continuation. That's the major thing that we need to find out in the nearest time. And in such performance that we see on the euro currency, where the situation stands really tricky and it's mostly driven by the external different statements, statistics or something of that sort, so market has no inner economical driving factors here. So we need to create some trading plan that led us to take the position with a very small risk and be prepared to a possible reversal. So this is important currently. But on the daily, as you can see, that's the patterns that actually stands on the table and where we will keep an eye on them. What we have on an intraday charts? On intraday charts, we have two interesting things. First of all, how a butterfly has worked. So upward action has started. It's also wedge pattern that we discussed yesterday, if you remember, and indeed this rally has happened. Although it was very difficult to predict because, as you understand, this was just by the Jay Powell speech. As a result, take a look, market has broken through the weekly pivot point, now stands at 1283 Fib level, Fib resistance. Currently, we do not know what will happen, whether this will be upward continuation or take a look at this picture. Market theoretically could turn down as well, so because we could get left shoulder, head, so it could become right shoulder. And right at this point, since this is the top of the right arm, so maybe market could proceed slightly higher to the weekly pivot resistance just to match the top of the left arm. But actually, that's the area that should signal us what to wait for. If market somehow will break through it and start moving back to the top, we're dealing with a daily pattern. We're coming to the neckline, and it will mean that upward action probably could continue. But if market will turn down here, starts dropping, it tells that we have here, first of all, this head and shoulders and A, B, C, D pattern, but potentially we could get the butterfly, as I said. That could become left wing of the butterfly, as you understand. That could become the right wing. So that is all about this area. So that's why this level is very important, this resistance. How we could act in current circumstances. So take a look at the hourly. On the hourly, we have this rally. If you remember, this was the wedge pattern that we discussed yesterday. So anyway, market is coming to the local OP target with this ABCD, almost has been hit. And here, guys, I think that we could keep an eye on the possible minor pullback somewhere to the 1245 area. Why? Because on the hourly chart, we have not bad thrust. Yes, it's a bit short. It's 1, 2, 3, 4, 5, 6, 7 candles only. But the candles in general are not really bad, and that's actually the only tool that we have which could let us relatively safe trying to go long, trying to take the long position. And we could treat it as the bread and butter lookalike. So if market will drop back down, here is also 1250 weekly pivot point. On the hourly chart, this will be first Fib support. It could give us a kind of the bread and butter buy situation. It's also previous, as you can see, resistance, support resistance area. So 1245 actually not bad area. It's also, you can see here is also around 1240 support. In these circumstances, with the minor pullback up from this area based on momentum that we have from yesterday, we could move stops to the break-even. And if we will be correct, the bread and butter will continue right to the upside with the pattern that we have on the daily chart. But if we will be wrong, and market somehow will show a minor pullback and then starts down, well, in this case, we will have the break-even trade, because at the first pullback of the bread and butter, we could move stops to the break-even and just see what will happen. That's, I think, the scenario that could help us to not stand aside and just watching what will happen, but take the part in the overall action and be prepared for any scenario. So use the momentum of the previous rally of the Fed statement. That's the idea for today. So besides currently, guys, I personally do not see any patterns to use for trading currently. So anyway, we stand at the resistance and need the pullback. Maybe some other patterns will be formed. Maybe some ABCD retracement will be formed here, and so also will be the agreement. So just keep an eye on what will happen. That's what we see right now on the euro. So that being said, the two moments. First of all, we need to estimate the durability and reliability of this rally that we have based on the Fed, because it could be a short-term reaction. We do not know definitely yet what it is. Second, that is the trading plan that led us to take part in the price action today and provides relatively low risk of the position taken, and led us to estimate the further direction being involved in the process. So that's probably all for today. Let's see what we will get.